Welcome to the Ryun Givens & Company Tax Blog. I'm Curt Brand. Each week we will look at an area of taxation to provide you with knowledge and help you plan for the future. Today is the third installment of issues covering healthcare reform legislation and related tax changes. The topic today is the employer mandate. Last week, the Treasury Department announced that this key provision of healthcare reform will be delayed. The employer mandate, which was supposed to be effective beginning on January 1, 2014, will now be effective on January 1, 2015. However, this delay does not change other provisions of the law, including the new insurance exchanges and the requirement that individuals purchase health insurance. We will address those topics in the coming weeks. Here's a very brief overview of which employers may be subject to the employer mandate. The employer mandate will apply only to a large employer. This is a business that employed an average of at least 50 full-time employees on business days during the preceding calendar year. To determine if an employer is an applicable large employer, you have to look at the number of full-time equivalent employees. This is also determined based on the hours of service of employees who are not full-time. A full-time employee for any month is an employee who works on average at least 30 hours of service per week. Thus, to be a large employer subject to the employer mandate, an employer must have at least 50 full-time employees or a combination of full-time and part-time employees that equals at least 50. This change in the effective date now makes this provision effective after next year's congressional elections, even though the look-back window will now be calendar year 2014. If you would like to discuss how these issues affect you and your tax situation, please email us or call us at the number on the screen.